Welcome, everyone, and good morning. I'm Eric Ervin. I'm the CEO and founder of Onramp Invest, which was recently acquired by Securitize, and I've really had the opportunity to now work with the Securitize team for quite some time. But actually, I've known Jamie, the founder, for even longer. Actually, towards the beginning of Securitize, so I'm kind of excited to kick this call off. What we're doing today is a fireside chat where we talk about really the history of Securitize and the markets in general, and then the present, where we are today, and really where is this going? Because this technological innovation is pretty profound, at least so we hear from a lot of people, and so I believe. But also, if we can hear right from the horse's mouth of someone who's been in the trenches and really building it. From a housekeeping point of view, please, if you have any questions, feel free to just type them in the chat. We'll try to get to them either during the talk or after. A lot of questions have already come in, so we have some pretty good Q&A. We'll probably banter for about 30 to 40 minutes here, and then we'll open it up for questions and Q&A and go as long as everyone likes. So without further ado, I'd like to introduce you to the man, the myth, the legend, Jamie Fenn. Jamie, it's great to have you here with us today.
Thank you. I'm excited to do this. It's always fun to get the opportunity to speak to a whole bunch of our prospective customers and folks who are just interested in the space. It's heartening to connect with people, I would say.
Yeah. So maybe let's just start with the past and the origin story, if you will. So how did you and Carlos come up with this idea for Securitize?
Yeah, so it's an interesting one. Back in 2017, there was a lot of things going on in the nascent kind of crypto markets. And I had a friend who mentioned to me that an old colleague from Telefonica, Carlos Domingo, was starting a venture capital fund. And I thought, well, Carlos is a super smart dude. And I would love to invest in a venture capital fund because I've never actually had the opportunity to do so. The reason for that is any number of I didn't have enough money. Usually investing in a VC fund is $1 million plus just to be able to get in. B, you got to know the right people, which is also very hard. Even though at the time I was in San Francisco, in Silicon Valley, just being able to get access was a real challenge. And see, when this whole thing started, we were kind of in different parts of the planet, and so there was a whole raft of things that really interested me in what Carlos was doing, but it made it really hard for me to be able to participate in this asset class. And Carlos, explained to me, actually, I have good news. I can accept your money. We're happy to take a smaller check because what we're doing is actually a venture capital fund that has this really innovative new feature. And that new feature is that it's tokenized. And so they're able to take smaller checks. And most importantly to me, as a smaller investor, was the access to liquidity. And at the time in 2017, there was this idea that there would be a liquid marketplace where you could essentially trade these securities. And it didn't exist at that point in time, but flash forward today and we can. And so really, the way we started Securitize was I put my money where my mouth was and invested in Spice VC. And then from there, I told a few friends about what Spice was doing. They had a lot of interest in it, and we were off to the races. And kind of what I thought would be a side gig for a couple of years because I was doing a successful startup in San Francisco, ended up consuming the last 6 years of my life.
That's great. There's a lot going on there. I was an advisor for many years, and I know that story intimately, where I could recommend these products to clients, but I wasn't sophisticated enough to invest in them myself according to the rules. That was always like so frustrating for me. And the high minimums, like my neighbor was literally a rocket scientist, and he wasn't able to invest in some of these investments because, again, he wasn't sophisticated enough or didn't meet the minimums. So I always felt like it was just kind of rigged. Like, why do these people get to invest but these people don't? So a lot has come, in terms of regulations, but companies like Securitize and visionaries like yourself, have really like enabled one piece of that equation. And it's just good to see. So when Securitize first started, what was the thought? What was like, we're going to solve this problem? How did that come to be?
Yeah, so I mean, the Carlos and myself have been kind of through the digitization of multiple industries throughout our careers. And so, I started very much in music and kind of the first digitization of music, going from like CDs and LPs to streaming music. Like that was a huge transition that was kind of the first step in my career. The second step was really the digitization of communication. So, what we're doing right now in Europe at the time that I was there wasn't actually legal because it had so many controls and regulations about it. And so Carlos and I worked together at Telefonica to really move voice over IP and kind of video communications forward pretty dramatically while we were there. And then, this really seemed to me to be like a natural evolution. Like, why is it that you all these alternative investments and private securities are, paper based and take tons of paper and time, and it's complicated to get into, and it just didn't make any sense. So, we really looked at it as a technical problem of improving the technology to digitize the asset. We didn't realize all of the regulatory hurdles that also existed, and really had to learn pretty quickly and get almost a JD and a PhD uh, in this simultaneously. Luckily, Carlos has a doctorate in computer science. I had to work more on the legal side.
Yeah, it's funny that you say that. So it's one part like financial engineering because either someone is generating a financial product or creating a financial product. One part technical engineering, so you're actually building solutions where the whole world can talk to one another and you can have these assets trade digitally. And then it's a whole nother issue where you're like regulatory engineering of kind of this regulatory Tetris. So I guess with that was the initial idea this might take a decade or more, or was it, no, we'll just get this out. We're technologists. We're gonna pump and solve it, and it's gonna be great. It was like
Yeah, it
or maybe
was
somewhere in
it was
between.
much more the 2 to 3 years. We'll get this thing
Yeah.
going. It'll be massive adoption because when you look at it, it's a fundamentally better product and a fundamentally better format. So logically, it makes sense to work this way instead of working, in a traditional approach. We may have been a bit naive on that point.
But it is funny too. It's like the Uber story, and it's just a meaningfully better user experience. But obviously, the rules and regulations weren't there at the time. So I think eventually the user is the one who demands the change, and if you give them a really beautiful, elegant solution like you guys are doing here, that's really the start of it all. So that's cool. So I guess as you started, you think it's going to be, yep, we're going to put this out, we're going to build. Well, maybe we could just. So what is it? What is Securitize? And then maybe you can contrast this with what it was and what it is. Like, what are we trying to do here?
Yeah. I mean, Securitize really from its inception has been the exact same thing. It's always been about expanding access to alternative investments and kind of private securities. That's always been what we've been doing. But today, I think what we're doing that's kind of been an evolution is really working with kind of the best asset managers on the planet to bring their products to a broader audience. Anywhere you look, the firms like KKR, Hamilton Lane, and any number of other asset managers are looking to expand their reach and distribution. And so they look at a lot of different channels to do it. And it's a hard thing to do because it's hard to engage with the investor. They're not really set up to deal with kind of a more retail investor. They're really set up just for large institutions. And so, our platform kind of slots really nicely in there where we have the digital experience for the retail investor that they can come in, buy a product through an online experience. It's less high touch, and they can access all the reports and information they need. But at the same time, it works really well for the asset manager because it helps meet kind of one of their goals, which is expanding access. So, I think we're very aligned in that way that we've always been about expanding this reach and making kind of the better products available to more people. And that was really the reason that it made sense to kind of do what we're doing and bring actual products to market beyond just providing infrastructure and technology. We now have evolved to actually start bringing the funds directly to investors and allowing investors to go through our online portal and be able to purchase products.
That's great. And I guess maybe some numbers too. I just pulled this out of a study. I think it's something like 85% of all the assets that are invested in alternatives are coming from the big institutions, the foundations, endowments, the pensions, but and so just a small 15% or so comes from individuals, and those individuals aren't, you and me. These individuals
Right.
are like very, very, very wealthy, large family offices. So even that is kind of shocking. Like, but yet the individuals have 50% of the wealth. So we have this huge pool of wealth, and we have this kind of weird dichotomy where public equities are not doing, they're doing okay, they're doing well, actually. People have earned good returns, but they're missing out on almost half of the return that is
Yeah.
is out there in private investments. And like you say, it's not because they don't want to. It's maybe an education problem because they don't know they can, but it's also just it's really, really hard for these large asset managers who would love to have individual investors to get those individual investors. So it's one part of distribution problem, one part of technology problem, one part of an education problem. We have a lot of problems to solve, is kind of what you're saying. But I think, but like the solution is worth it. There's a lot of people that need to hit retirement goals, and if they don't have access to this kind of stuff, it's just gonna be hard. So I don't know. I get pretty excited about it. So
Yeah, I mean, one
yeah,
thing I would definitely add just on that point, we have our lead investor is Morgan Stanley, right? And so Morgan Stanley, you might ask, why would they invest in you if that's a competitive, theoretical type of experience? And the reason they invest in us is because they really see kind of this democratization of access as a crucial point. And I'll just give you a point of reference regarding that. So if you're sitting on less than $20 million at a Morgan Stanley account, nobody is making any fees off of you, right? And so if they're not making fees off of you, the incentives aren't aligned to have them help you invest in a more complicated product. Because obviously, to explain and bring somebody through the process to onboard in a traditional way takes months to get somebody on and get them invested. So it's a huge amount of time for the advisor on the Morgan Stanley side. So they want to make sure you've got a big enough account with them. With us, we have a digital experience, and we love people who have less than $20 million. They're the perfect customers for us. Small business owners are great. And it's something where we see a lot of opportunity to service a humongous market of very wealthy investors that just aren't really being properly taken care of.
yeah, and I get even just to put a bow on that. So it's not just like Onramp itself. You acquired Onramp about 6 months ago. That the whole like lot in life for Onramp was to service that RIA, the individual advisor who's managing
Yeah,
clients, in that space. They don't get access to a lot of these investment products, and it's also important to note too that I think a lot of people miss this. So we have public equities over the last 10 years have averaged around 8.5%. Great return. The best public equity, kind of money manager is right around 8%, and or sorry, 9%, 10%. And
yeah,
the worst is around 7. So if you spend all your time trying to pick the best money manager in the stock market versus the worst money manager, you're gonna, kind of be in this like type band. If we go over to private equity, the average is around 16%. So we've already got double. And we talk about that a lot. Like, yeah, the average private equity manager. But the best is around 24% and the worst is
yeah.
around 4%. So it's really important not just to invest in private equity, but to invest in the best of the private equity managers. And that's really kind of hard for most people. KKR doesn't just open their doors to an individual investor. So how did you at Securitize get KKR to say, yeah, we want to embrace this. We want to offer our funds for $10,000, $20,000 a minimum.
Sure.
Like that's amazing to me.
Yeah, I mean, I would say it was an exercise in not giving up, which I think is probably one of the most important things in doing a startup is just not giving up and being resilient. I mean, we spent the better part of 3 years speaking with them about collaborating on a product. And when we started, we weren't a regulated entity. We were just a technology vendor, and we were trying to sell them technology. And we spent about a year and a half of that when we realized, wait, we really need to get licensed and regulated in order for these guys to take us serious. And so, we went down the path of getting a transfer agent registration with the SEC, and then also getting a broker dealer license from the SEC and FINRA. in order to be able to transact in these products in a way that is kind of very similar to like a Morgan Stanley or Goldman Sachs would have to deal with it, except adding the benefit of it being digital. So, we're regulated in really the same ways as your traditional financial institutions, not necessarily a bank, but more a brokerage. But, we're just a lot more agile. And so once we got these licenses together, we were able to get the kind of confidence from KKR and trust, because this is really a trust game at the end of the day. If you're going to give your money to somebody, you better trust them that they're not going to steal it or do something bad with it, or there's going to be any problems. And so regulation covers one piece of trust, but the relationship and like getting to know people, and then, who are the people involved in the business? What's their history? How do they work? Was really the part that we didn't necessarily understand. And it took us, a few years of working with them. And then finally they said, okay, yes, we have this product, which we think would be really great for it. And we were super excited to bring out the Healthcare Growth Fund too, which is available on our platform today.
That's great. And it's not just KKR, it's Hamilton Lane, it's and many others that I mean I see your calendar and who you're talking to, and these are some of the world's like some of those managers I didn't even have access to when I was at Morgan Stanley. So
Yeah.
that's again, I just can't impress upon our audience enough that these are, and I think part of it is these managers see the potential, and they see this as kind of one of the big innovative pathways into, it's just like streaming video versus sending a DVD to your mailbox. They
Just
get
makes
it,
sense. Yeah.
and
Yeah.
so they want to lead with the industry leader. So that's really great. So what are some of the other things that we're working on at the moment?
Yeah, I mean, so when I look at the kind of space that we have and kind of the opportunities, we try to bring a few things to market at a time that really fit in different categories. We saw the private credit market really starting to boom in 2022 and saw a huge opportunity there. We were lucky enough to partner with Hamilton Lane and be able to bring their private credit product, Scope, their Senior Credit Opportunity Fund, to market in a really super innovative way. And this is something that, we try to not only make a product available, but we try to rethink the whole process. So when you think about that, we have to think about how you buy it, how how it gets reported back to you, how do you redeem it, how do you trade it, like all the different things that can happen in the life cycle of this investment. So, getting somebody through the door is one thing, but then caring for them and making sure that they can understand the reports and can get their money back when they want is really important. And so if you look at Hamilton Lane's Scope product in particular, we deployed that with it's an evergreen fund, right? So you can invest in it on a monthly basis. It has a specific day it closes. And so you can invest, and this fund has gone from like 50 million to well north of 300 million and is growing super fast. It's kind of a mid-market product, so it's not like super risky private credit. It's much more like great companies with good growth who need cash. And since you've seen the compression, like banking firms simply can't lend money anymore, this is where PE has really stepped in, and that's why private credit's growing so quickly. And what's really unique about this product: sign up online, buy the product online, get your shares delivered to you digitally, and then a month later, you need your money back, no problem. You can redeem in one click through our portal, and your cash will be delivered to you into your account. And so we thought that that was a really important way for people to get access to this new category. And we really made the minimum super low. It's like $10,000 on that product, so that people could try it. For me, I personally put my money where my mouth is with these products. And, I have to make sure that we're doing things the right way, in a way that cares for the investor themselves, and knowing that not everybody's like the most sophisticated, dealing with, all the guys at these large firms, like being, cautious about that. So we try to bring product to market and add features to it to make it better, and eliminate features that are kind of scary. Like things that are scary to me is having my money locked up for a decade. That's scary to me. Like I'm not comfortable with that. The whole idea of giving somebody $1 million, that's scary to me. Like I'm not giving you $1 million yet. Like I don't have that kind of money, so I'll give you 10 grand, and we'll try it for a couple months, and we'll see what happens. And that's really what we're doing with our platform, is opening up that possibility for investors to get into private equity.
Yeah, it's funny that you say that. It's it doesn't matter if it's on average double the returns. It doesn't matter if every pension endowment and every like professional investor chooses private equity over public equity. You tell me I got to lock up my money for 10 years, that's like terrifying. And there's a reason that it's able to earn that premium. That's that like liquidity premium is for a lot of these things. So it's cool. And in a way, I would say we're almost because we're the innovators, we're almost subsidizing this. So we are the ones offering, that's our expense. We're the ones who are kind of built like breaking down all these barriers and offering lower minimums. We're the ones doing that. And so it's to the investor's benefit because we have to prove ourselves, which is kind of a pretty cool thing if I'm the investor, because we can take advantage of that being that early adopter. So yeah, again, it's neat. So when you look at competitors, if there are any, how do you see like the landscape of kind of where Securitize is today at this moment?
Sure. So I think there's definitely competitors in the space. Obviously, there's the funds themselves directly. Additionally, there's firms like Case or iCapital or Moonfair that all offer different ways for investors to access these types of products. I think the main differentiator with us is really uh, simplicity and fees, right? So we as a firm charge 50 basis points on assets under management, period. There's no additional fee that we throw in there. We don't take any carry on products, right? So it's very, very simple. We don't have any subscription fees. We don't have any redemption fees. It's just 50 basis points, right? And so I thought that that was a really important feature. And 50 basis points is what you'd pay, your private wealth manager if you had 20 plus million with them. If you've got less than that, you're going to pay more, 85, 90 basis points to get into this type of product. And on some of the other platforms, they have subscription fees where they'll charge you a percentage up front, which kills your return, or they'll take a piece of the carry. That didn't seem to make sense to us. We're not the fund manager. We're helping you access the fund, right? If I was a fund manager, yeah, I deserve carry because look how smart I am at the great deals I did. That's not what we're doing here. We're bringing you the great funds and we're giving you access. So I don't deserve that money from our point of view, right? And so 50 bips, a nice simple way to do it. And that's really what I think differentiates us, along with the thing which we spoke about before, which is liquidity and access to the ability to either redeem on demand or sell your shares to somebody else via a regulated marketplace in the US. And I think that those two features are really pretty groundbreaking when it comes to this type of product.
Yeah. And I guess maybe just because not everyone is comfortable accessing these kinds of things on their own. I think once they like explore it, I think they'd find it is a pretty delightful experience. Like it's almost like open an account. But but if they did want to use their financial advisor, is that it's a little, yeah. So just talk through that
Well,
piece.
that's more a question for you, right?
Yeah, yeah.
I think you should explain that piece, and that's why we wanted to work with Onramp is we have to recognize that there is a big market and a huge opportunity with the RIA space to make these products available, which are not traditionally available, like you mentioned earlier. And for me, I learned a lot about the space from you because I never understood that by us making the data available through the portal, that just simplifies everything for everybody. We thought, oh, we'll just sell these directly. No, no, no. These guys, they need it, properly served into their system so that they can report on it back to their customers, and then you have this unified view. But no, I'd love to hear more about it from you because I'm really still learning.
Yeah, well, I think that's the thing. So if you have a financial advisor as a client and you're thinking about getting access to these kinds of products, some financial advisors just they don't understand themselves, and so they need to get educated on the benefits because they know stocks and bonds and ETFs and bond ETFs and that's kind of their world. And so part of it is education. So you're right. OnRamp is a great tool for them to even it. We've built like an entire educational platform for financial advisors, but it really comes down to it's just ask your advisor to talk to us and we can get them set up within days and now they can have access to all the same investments that you could access directly with Securitize, or you could go through your advisor who uses OnRamp as Securitize kind of portal or link into that. So that's kind of the point. But there's a lot of firms that just don't offer these things at this time, and so maybe you have to, take part of your allocation and come direct. But again, and we have some pretty good investment specialists that can work with you. I was a financial advisor. We have other advisors that can work with you. But yeah, we'd love to talk to your advisor so it's all in one place. Like we have one financial plan. Definitely. So I guess we talked about the fees, we talked about like where we are today, we talked about maybe just how many products do we have? How are what kinds of products?
Yeah. So we have a number of different types of products on the platform today. And I think categorically, this is kind of where you'll see the focus from us. So, we're bringing really private credit products, primary markets, like primary private equity products. So like an direct equity investing type of vehicle. And then one that I'm super excited about because I think it's a great time for secondaries. I put it on LinkedIn. Secondaries funds. And secondaries funds are super interesting to me because of the market and the way it is today, where you had a very, very hot market for a few years. Now it's cooling down. And guess what? People need liquidity. And when people need liquidity, you get discounts and then you get great return. And so, from our point of view, that secondaries market, I think, is a fantastic place to be. And then we're going to see some individual like funds and strategies. Our customers have been asking for buyout funds. Buyout funds are great, but they tend to be kind of big bang type of returns, whereas secondary funds tend to be cash flowing from year three, which I really like because I like to get my money back, as I mentioned earlier. Private credit's a great kind of lower risk option, and then primary equity or direct equity investments are kind of the other area. What you haven't heard a lot of from us yet is real estate. I think real estate is a wait and see. We have some great real estate customers on the platform as the transfer agent customers who are scaling. But in terms of us directly selling a fund like that, we haven't really brought anything with scale there yet. But we're waiting to see, how that market shakes out. It's probably the place that scares me the most, if I'm being brutally honest.
Yeah, it's been a good market. Maybe, as you were talking with that we throw around a lot of jargon and sometimes, we have a big audience. So I'm just gonna really quick go through private equity as an investor and some of the mechanics so they can understand a bit of this. So typical private equity fund, you're gonna allocate $1 million, $10 million, whatever, and that private equity fund says, great, you're in for 10 million. We don't need it all right now. We're going to go out and find investments over the next 3 to 5 years. And we're going to make those investments and we're going to call that money from you over time. We call this the J curve. So you're going to be investing over time, writing checks. Now, Securitize does this a little bit differently, but I'm just explaining private equity as a whole. You're going to be investing over time, writing checks. They're going to be buying businesses. And then those businesses are going to kind of start to improve. They're going to come to fruition. This is why all of my entrepreneur clients loved private equity, because it's not just like put it in the stock market and hope and pray. It's literally own the business, buy the business. Insider information is legal. Like everything, the deck is stacked in your favor, and these companies are able to improve these businesses. Then now they start to exit these businesses. So now this is years 5, 6, 7. And then finally in the years 8, 9, and 10, you're starting to see checks back as they're selling off those businesses. So secondaries, we talk about secondaries, but what's happening is this private equity investor who allocated the 10 million, they've made some checks, but now they for some reason they need their money out and they want their money back, and their only option is to sell it on the secondary market, where you're probably not going to get the best deal. But if you're a buyer of these secondary funds, they're great funds. Everyone else is happy with them. They're good returns. But now you're able to essentially juice your returns because you're now buying at a discount. And the ugly part of the J curve, when everyone was making the investments, is probably behind us. And so now you're into distribution mode. So I love secondaries. I've always loved secondary funds. And again, it's just really cool that you're thinking kind of with the investor in mind of like what does the investor deserve, and they may not even know what secondary funds are, but you're already thinking about like how do we offer these kinds of things to investors. So again, just hats off. So now maybe we could just touch on the future. So what do we see? BlackRock CEO, largest asset manager in the world, Larry Fink, says ETFs are one step in the technological revolution in financial markets, but step two is going to be the tokenization of every asset. Do you agree with this statement? Do you have any thoughts on it?
I absolutely agree with the statement, and it really comes back to the initial idea of Securitize. It just made sense, and it does. Like there is very little, there are very few industries that stay analog. Everything gets digitized over time, right? And so as things get digitized, uh, naturally everything will get swept up in it. And I think if you control 25% of the world's money, like BlackRock does, and they say tokenization is the next thing, you probably want to pay attention to it. And so from our perspective, we really see a massive opportunity. We have some great partners today. We'll be announcing many new partners on the asset manager side that we'll be partnering with to bring product to market and be bringing, what I think is the next step, which is fully tokenized funds, like mega billion-dollar funds to market. Not a feeder, but actually the whole fund is just tokenized and it just operates better that way. And so that's where we really see the future. And then the important thing here is the ecosystem that really develops around it, because we're not trying to control this in the kind of sense of dominating the market. We're trying to digitize the market so that other people can innovate and create their own functions and capabilities, within that. So, it's in other spaces, borrowing and lending in traditional finance, huge opportunity, right? But really hard to do. Why is borrowing and lending really hard to do in TradFi? Well, how do you prove without a doubt that the person says that says they own a product owns it? Like, how do you prove that? And how do you prove it's not encumbered with something else? And so, we think that, and we've seen it in the kind of crypto markets, borrowing and lending has been a thing with a ton of scale with the whole DeFi space. We see that as a huge opportunity, a lot of hair on it from a regulatory point of view of exactly how you execute it. But for sure, the tokenization of these products and makes it so that you can absolutely define who owns it, and if it's encumbered. And those are the kind of core pieces you need for the next step. And we really, expect to see developments around that, people creating kind of borrowing and lending marketplaces and things of that nature. So a lot of excitement there, and also international, right? So the ability for international investors to be able to enter these products now that they're digitized and you can keep track of the transactions and where they're going is much easier. Historically, it's been very regionalized, or localized, I should say. You'd have a US product and then an offshore product, and that was sold to certain regions only. Our products are really available to most investors. And we think that that's a really important feature of what we're doing. And the reason we can do that is because we use digital processes. We know where you come from. We know, what you're doing. We know if you can buy it, and we know the criteria in your country. So we have to abide not only by US laws, but by every other country's laws as well. So, from a compliance point of view, once you automate it and you make it much more programmatic, it makes it much easier to do all of these things, which in the traditional world just can't happen.
Yeah, it's funny as you were kind of mentioning that, and I was thinking about you mentioned crypto, and I thought of Napster. So Napster, huge innovator, and they
Yep.
but they were pretty loose when it came to regulations, and also so Napster is the crypto economy. They innovated. They just went out there and they built things and they broke things and they stole things, and there was like just all this just chaos. But there were some really amazing things that were invented there. And then Apple comes along and Spotify and all these others and says, well, all right, thanks, children, but let's do it right, and let's also follow the rules and the regulations. And so it's a little bit of that. I'm not sure if we all agree with that analogy, but it just that's what I was thinking
Oh,
about. Yeah.
yeah, I know. I totally agree. I mean, I can remember I used to sell music services, and I can remember talking to one of the largest telcos in the world, saying to them, streaming music is going to be a massive thing, and then they're saying no one will ever pay $10 a month for a music subscription. I'm pretty sure everybody on here pays $10 or more for a music subscription at this point.
Yeah, it's good, and it does. It's like new revolutions in anything are a little bit kind of clunky. They're hard. They're confusing. They're only embraced by certain people. The streaming was a good one. I'll never forget buffering, but right. And it's just that there were a lot of things that were not great about it, but it's if you can give it a chance, eventually that technology crosses the chasm. Cars were not reliable. They were, they're just a pain back in the early days, but yeah, I'm pretty sure the car worked out. So it is one of those things, but it's hard for a company like Securitize who has to live in the old world and the new world to enable this kind of crossing of the chasm. So I guess just you talk about like all of the jurisdictions and all of the like how is that how is that possible? Like how can large asset managers issue their funds in all these jurisdictions? Is it because literally Securitize is making it happen so that they don't have to?
Right. Yeah. So we onboard the investors through our platform, do the KYC, AML, accreditation, qualification, whatever it may be, on a country by country basis, meeting the criteria that they have, and then let them purchase the products that they can purchase based on where the funds have been created or where our funds, our feeder funds, in some cases, are domiciled. And so, yeah, it's sort of a hand. We work hand in glove with them. So we always, we're not doing something the asset managers would want us to do. And we're always kind of trying to find the most scale for it. And that's what they're interested in. I mean, we have north of 500,000 investors on our platform, right? And they come from over 120 countries. And so that is a very large population when you think about it. And so the ability to kind of get product in front of that audience also, I think, is quite appealing.
Is as we again we think about the future, is it Securitize's job to help, say, a real estate like a big somebody who owns, I guess, to, World Trade Center
Sure.
to tokenize that and then enable distribution of units of the World Trade Center, or is it more like an asset manager's job buys a pool of assets like the World Trade Center and others, and then they come to
Yep.
Securitize and say we want distribute? Like how far up the chain do we go?
Yeah. I mean, so we kind of crossed the whole spectrum, right? So when we started, we did a lot of single assets. So like we worked with the St. Regis Hotel in Aspen, Colorado, and we tokenized that $18 million worth of that, and that was in market for a while, and it's still in market. And it's on another platform, but it's still in market. And so we've done that. We've worked with Exodus on their mini IPO. They went from on our platform, they raised $75 million, and then subsequently are now listing on one of the big boards, right? And so that whole thing is we worked with Oddity, and who also used our platform to sell shares that were then sell tokens that were then converted into shares of the public company. So we've done a number of kind of end to end on those types of things. But I think for the individual investor, picking a company as a winner is really hard, which is why the products we're bringing to market tend to be more funds at this point, and we really see the opportunity in the fund area. I've done a bunch of angel investing, not with the most success ever, and funds investing just seems a lot more straightforward. I can't do it full time, and so to have somebody whose job it is to evaluate and look at the details of a company, fantastic. I'm very happy to do that. I still do a very, 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 very limited amount of angel, and it's usually just money that I lose. And it's unfortunate.
Yeah, well, you're not alone. Don't worry. Even the VCs and the pros, many of them get it wrong, as we know. Oh, I guess speaking of VC, do we have a VC product, or is that in the future potentially?
Yeah. So absolutely, there will be additional VC products. Today we have Spice VC, which is kind of how we started, and then we have our lead investor, Blockchain Capital, also on the platform, and so those two funds are on there. And we have additional products that have been tokenized through us. We have actually have a really great one I can't tell you about yet, but it's coming up. I'm pretty excited about it.
All right, sounds intriguing. And on the VC fund, I mentioned private equity and the J curve so VC is similar, but we do it a little bit differently presently.
Yeah,
And maybe just touch on that a little bit.
sure. Yeah, so one of the things that I found kind of scary was capital calls. I never really understood what they were and how it worked, and when are you going to need this money? And so, as a smaller investor who's not sitting on tens of millions of dollars, when somebody shows up and says, I need 50 grand in a week, you have to come up with 50 grand in a week. It's a capital call. And if not, you kind of lose your spot in your investment. And that's super scary. Like, I don't want that to happen. And so we got rid of that, right? So we call all the capital up front in our products. We hold it in a yield bearing account. The investor gets the benefit of it. So, if treasuries are, 4 or 5%, whatever they're at, they're getting the benefit of that added to their investment. And as capital gets called by the asset manager, Securitize is in charge of making sure that the capital gets to them from the accounts that we hold. And so that's really the way that we've managed that. And we think it's you know, for more retail investing, we think it's a better solution than having chase people for $1,000, $2,000, right? Like, it's just not practical.
Yeah, it's and it's kind of interesting as we grow. I'm assuming we'll have different like different types of clients, and we'll probably have
Yep.
different types of investment. But this is pretty good, particularly because we're keeping the money invested in the
Right.
meantime. So you're almost earning now 4 or 5% without even doing anything, and plus all of the returns of the fund. So that's a pretty nice way to do it. Why don't I'm sure I'll come up with some other questions along the way, but I'm just noticing some questions here. So maybe if we could touch on, again, you mentioned trust and safety and security, but maybe if we could touch on the safety of my funds in Securitize, not necessarily like does the fund go up and down, but
Right.
does it disappear? And
Yeah.
this technology is interesting and it's innovative and it's great, but you hear a lot of questions about this. So I don't know if you want to just talk on that. Maybe I'll even kind
Sure.
of pepper you and put you on the spot
No
if we
problem.
could pretend like a
Yeah.
question.
So absolutely. So um, the way our funds are set up, each one of them is an independent entity that we create. And so we have either a Delaware or a BVI vehicle that we create, right? It's not sitting on Securitize's balance sheet. It has its own EIN, it has its own entity, it has its own bank accounts. Everything is kind of siloed and separated intentionally. And so it's really important, right? Because if something were to happen to us, and we've seen, a bunch of companies kind of go up in smoke, we don't want our investors to be exposed to that. And there's really no need, right? Because the capital is secured. It's sitting in, a bank. If it's being held, we bank with UBS on this product side when it comes to the actual cash that we hold. And then the securities and the position is held by the asset manager. So if you've invested with KKR, there's a position in there that says the securitized fund in particular, and then within that there's the transfer agent, which again is a regulated entity that keeps track of who owns what, and the SEC has oversight over all of the operations, sees exactly what's there. So you're holding essentially shares in this entity, and that entity is the investor. So there's no exposure that Securitize Inc. is the investor into the fund. We don't do that.
Okay, and then maybe just again, this may sound naive to you, but I'll pretend like I'm sure a lot of investors know it. So it's in this token, and if I lose my private keys, or like talking to me
Sure.
about this, just that kind of scariness.
Yeah, yeah, of course. So I think when we talk about tokens or cryptocurrencies, people there's nightmares about, oh, I lost my keys and I lost all my money, and you know for better or worse, luckily these are securities, right? And because they're securities, they have different requirements that are imposed by the regulator, and there's different controls that have to be there. So if somebody were to lose their keys or access to their account, just essentially what we can do is destroy those tokens and reissue them to a new wallet. It's something that we have done in the past. It still does happen. We've never had an issue resolving it. It's done through our regulated entity, Securitize LLC. It's a pretty straightforward process. It's same thing in death or divorce. Like, we can handle all of those types of scenarios. So being a security, I usually describe it like, even in the context of music, it's like the song remains the same. It doesn't matter which format you listen to it on. Could be an LP, could be a CD, could be a stream. The song remains the same, right? So this being a security, doesn't matter if it's sitting on a traditional financial institutions books or in a token. We're regulated by the exact same entity, and we have to provide the same safety and controls. And so that's really the best answer that I can give with when it relates to that.
Yeah, so this is also there's another question on this, and I think we'll probably touch on it here. So we're creating this we're using blockchain, and these are public blockchains these tokens are created
Yep.
on, right? It's not our own private blockchain. And we're issuing this token. But we're also keeping a separate ledger, just like everyone does in the traditional financial system. We're basically maintaining the old books, and we're maintaining the digital books. And in theory, we would never even have to have the old books, because you just referenced the more modern system. But in the event that that there's any issue with one of the ledgers, that we always have that kind of record
The
of truth.
golden record, it's
Yeah,
called.
yeah, the
And
golden record.
I prefer to think of it as another node on the network, right? So we process all the transactions and update them through the blockchain. So that's really just another node on our network.
Yeah,
It
I
is,
see.
from a regulatory point of view, what we have to do, and it has to be in a certain data center environment. It has to be protected in a certain way. Only certain people can be accessing it. They have to be fingerprinted. Like there's a whole bunch of controls around that on the transfer agent side. But again, to me, it's just another node.
Uh, and then I guess just okay. So now let's like touch on a dividend. How does that happen with
Sure.
these securities?
So essentially, a dividend will be announced and reported to investors, and assuming they don't have a dividend reinvestment set up, the cash will be delivered either to their bank account or into a cash account on our platform in U.S. dollars. Everything we transact in is in U.S. dollars, and so you're not dealing with any risk associated with any cryptocurrencies at any point in time. We use the blockchain as a method to process transactions, not as a way to value things. Early on, people were really concerned about the volatility of, the price of X, Y, or Z currency. It's really isolated. We don't touch that at all. We just use it again to process a transaction. So it's very isolated from that risk, and so it's really just in dollars that we transact.
Okay.
We're not allowed to deal in crypto at all. So.
What about the dividend reinvestment and other things? Like how does that? Do I just get more units or more shares, more tokens, essentially?
Yeah, so it depends on the issuer themselves, but usually one of two things will happen. Either the NAV will be increased, um, and you'll have a higher NAV, or in some cases they opt to issue more securities to investors. It really depends on the asset manager. We have two different products that behave in different ways, even though they both are dividend reinvestment plans, and it's really up to the manager and the investor then to decide what they want. Because in
Okay.
our dashboard, you can kind of, I don't know if you've had to do it before, but if you want to set up a drip on something, it's usually get in touch with the broker, blah, blah, blah. They'll do something in somewhere. On our web, you just go to the web page and you push the slider to the right, and the drip is on, push it to the left, and the dividends get delivered.
Very
So,
nice. Very nice.
yeah.
Let's see. I'm looking through the questions here. We may not disclose this, but maybe we could touch on what are the AUM sizes of each of the different funds or offerings, or
Sure.
maybe you can touch on that.
Yeah, no problem. So the products that we're bringing to market today are, well, obviously we have some evergreen product that's growing. That's in a few millions, getting to 10 million. The other products that we have are in the tens of millions, and we see that kind of as a sweet spot of where we are today. I think we'll see towards the end of this year, like I said, multi-billion-dollar funds on the platform. It's slowly, and then all at once type of item. And so, as you go through the process of building trust with people, getting them to invest, them seeing the returns, then they decide to invest more, and that's how you really grow AUM at scale. Many people will come in, they'll put in the minimums 10, 20,000, or one thing people like is they can kind of spread it out. So instead of having to pick one fund, you can pick like 3 or 4, spread your money out, see the returns over 2 or 3 months, and then be able to reinvest into that product and put some scale behind it. So 50 grand is normally what people come in with. We then see them scale up pretty quickly to 250, and in some cases have seen them scale to millions.
Yeah, and for everyone's sake, I just want to explain. So in the feeder fund concept, it doesn't matter if it's a million or 10 or 20 or 50 million. It's really the ultimate fund that you might be caring about, because that's really what you're thinking of. So in the case of the Hamilton Lane, as Jamie mentioned, it's a couple $100 million on its way to three plus. Probably the KKR fund is, I would assume, billions of capital. I'm not sure.
Yeah,
These
it's a
are
multi-billion dollar fund
large.
for sure.
Yeah, they're very large funds. And then I guess one, just as a subtle detail, but the argument of well, but the fees are kind of spread out over multiple investors, so the admin but I'm pretty sure even that is reduced because Securitize is essentially like covering a lot of
Yeah,
those as well.
well, the other thing is it's an institutional share class, right? Which I didn't point out earlier.
Oh,
Most of the products that you buy are wealth management share class. And so wealth management share class or retail share classes sometimes noted has much higher fees on it. So ours, because it is institutional, because that's one of the things we feel like investors deserve, and these guys, the asset managers want to bring people in, we're able to bring that share class as opposed to a more retail product.
oh, that's a big selling point. That's great.
Yeah.
And going back to the concept of the J curve, and we're taking the money up front. I think I answered one question where that asset or those assets are invested currently in treasuries and
Yep.
equivalents, and so they are earning yield on behalf of the investor. What about when money starts to get distributed? Well, maybe while we talk about this, there's a couple ways that this investor can exit their position. One of them is wait until and then let's, I guess, talk about that. Are checks,
Sure.
Coming back, or the other is possibly selling on the secondary market. So we can maybe touch on both of those.
Yeah, I mean, the outcome is the same, right? So it doesn't matter if you're waiting to get your money or you're selling on a secondary, you're going to get cash deposited into your account, right? And so it'll depend on the size of your investment or the price that you sold at. But at the end of the day, you're getting cash into your account. And so as we receive distributions, you get a report from us that you can see online through the portal. You can download the docs if you want to, with all the information from the fund administrator to see exactly how it's performed, what the distributions have been, and then you'll also to see the money in your account. Again, we don't charge you to give you money in your account. We don't take a success fee, right? So it's really straightforward. Whatever gets made by the fund, gets delivered into your account.
So as these funds offer distributions, the private equity funds, those are kind of like treated almost like dividends. Essentially, they're
Yeah,
just
yeah,
money
they essentially, yeah.
not held by the feeder fund. And then do we offer yield on the cash that sits in our client accounts, or is there any?
Not yet. We don't not well. So I guess there's two parts of that. If it's sitting in a pure cash account, no, we don't. Working on
Okay.
that, but we don't offer that today. If it's sitting
Okay.
invested and it's capital that's been kind of invested into a fund, yes, we do. Because we don't control the investor's money when it's in the cash account. It's their money. We can't do anything with it. When it's invested, then we have control of it, and we can, essentially put it into treasuries and things of that nature.
Okay, good. There's a question I'll just answer this one, about RIAs and do they
Mhm.
need to update their disclosures on their ADV, which is a regulatory filing for them. If I don't know if we have your email address, but we can get back to you. But yeah, we can help you manage all that and get you all the kind of templated language that you might want to add to your ADV. So feel free to reach out to us directly or vice versa. We'll reach out to you. And then let's see, frequency of reports, transparency, avoiding management fraud. Love this question because it's really a tee up for what we do and why we do it.
Yeah, I mean, frequency of reports again is defined by the fund, right? So the main fund. So if we're doing some of our products are monthly, some of our products are quarterly, and you'll see products that are daily very soon. And so, I think that it really depends on the main product, and we're mirroring it. We will have a short delay because our fund won't replicate the exact NAV of the main fund because it has a yield associated with it on the cash that we're holding. And so it takes us a few days to calculate it, but it's usually not more than at most 15 days after we receive it. So you'll see quarterly or monthly reporting on that basis.
Great. Speaking of and then audits and like let's talk about safety and transparency in that regard
Sure.
too. Do we do audits? Do we?
Yeah, yeah. All of our funds are audited. The auditors are disclosed in the offering documents. We've been using Richie May right now for most of our products today. And yeah, everything's audited. It's all, registered with the FSC in the BVI if it's a BVI fund, here in the US with the SEC if it's a US product. So everything is kind of done, as you have to.
Great. So we're coming up on time. We have quite a few more questions that we can get to offline for y'all. I definitely want to thank everyone. Before we just absolutely wrap up, one question that was like asked a bunch was and everyone loves K1s and in terms of alternative investments. I say that tongue in cheek a little bit, but like one of the big frustrations with K1s is that they often come very, very late and you have to file for an extension and other things. Are these the same frustrations that our clients are going to face possibly?
Yeah, I mean, K1s are K1s. We can't change the
Yeah.
tax system.
Okay.
If it's a dividend product, it may have a different report associated with it. But yeah, we understand that pain. And there are some pretty interesting opportunities with, like that Evergreen fund from Hamilton Lane and how that operates. And I think that's probably where we'll spend a little more time. But with a traditional PE shop, you're kind of looking at what you look at.
Yeah. Yeah, we'll also somebody else asked retirement accounts, so we'll also start to enable
Yeah.
that and really make that available for everyone. It's super easy for them to do, which is makes K1s
Yeah,
non-event.
well, we just brought like on the retirement account, we just brought like a seven-figure sum in because somebody looked at it, it's like, I don't need this money for a decade. Perfect, let's put it there. Like to me, that made a ton of sense. I had something that I really hadn't thought about as such a huge opportunity, and I was like, oh yeah, of course, this is what I want to do.
Yeah, yeah, it just takes all that frustration off the table. So that's great. And I guess just with that, is there anything? I want to thank the audience, myself, and thank you, Jamie, for taking the time out of your busy schedule. But is there anything that you want to highlight, or did I miss?
I mean, as I no, I think the proof is in the pudding, right? Everything we do is available now. You can have a look at it. It's all online. We're here to answer any questions, and we're here to make the best products we can available. So we're always looking for feedback. So if you have something that you don't see on our platform that you're like, hey, it'd be really great if we're fortunate enough to be at a point where we're having the conversations with the asset managers, and we can say, hey, we'd be really great if we could get this product from you. And they're more than likely to say yes at this point. So that's something that just is worth considering.
Yeah, awesome. Well, great. Thank you everyone for attending. It looks like a ton of people stayed on, which is awesome. So we must have done something right that we didn't bore them off the phone. But yeah, again, thanks Jamie for everything, and thank you all for attending. We really appreciate you.
Thanks, guys.